Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from X. Today, I'm joined by Bill Sheriff. Bill is a pretty known name from the uranium space. He's the founder and executive chairman for enCore Energy, and he also serves as the chairman of C2C Metals Corp and Nuclear Fuels Inc., all three uranium companies. Bill, welcome to my show. It is great to have you.
Oh, thank you. Glad to be on with you.
Thanks, Bill. President signed the law that bans uranium imports from Russia. My question is the U.S. ready for complete cut off from Russian uranium? How will this play out going forward? What do you think?
Well, it's the topic of lively debate, that's for sure. And, I think most of the people are looking for not much of a reaction, because it does have the waivers and provides 5 years. I, however, have a very different opinion. I don't know why. Don't get me wrong, I'm not a Putin fan, okay. But at the same time, I don't know what would prevent him from cutting us off now and avoiding the waivers. The uranium to him, a lot of people say it's, economically important. It's less than 2% of his oil and gas revenue. And it's one of the most critical things that he could do to put a sharp stick in the Western world's eye. It is a zero-sum game in terms of the uranium in the world, but he controls a significantly larger piece of even the raw uranium through control of the shipping terminals. Obviously, there are other ways around, but they aren't very good. They're much more expensive. They're much more hazardous. You load, unload, reload, move everything. It's a bit of a uranium version of planes, trains, and automobiles. You have to move it so many times. So, and Kazatomprom keeps talking about moving it through China, but so far China's very reluctant to ship it beyond China. They're more than happy to receive it, but not to send it on. And now with the U.S. administration's lofting tariffs on China, I just can't see China being that eager to supply us. So, it's the 5-year waiver thing is really not very. It's not hidden very well. If you look at the projections in terms of enrichment, which is where they really have us, and the rest of the world really, with their 40% of the enrichment capacity in the world, that could be a real issue regardless of transportation.
Yeah,
it's going to be about 5 years if you look at the planned build-outs in a pretty optimistic light. You can see that's about the first time we could actually live without the enrichment. So it's a high stakes gamble, that's for sure. I guess I have somewhat mixed emotions on it as a U.S. citizen. I'm not sure it was a great move for us because it could really cripple our electrical supply if he chose to, at least in the short run. But at the same time, being in the uranium business, I think it's great. So a bit of mixed feelings on the subject. And I am an outlier. Most of the people in the industry don't think there's much of a chance that he would cut us off. But I find the Western world tends to be a bit overconfident sometimes and assumes that everyone will play the way they want them to. And the world's certainly not that way.
Yeah. The bill also includes 2.7 billion funding allocated to the historic Nuclear Fuel Security Act, which is the largest cash infusion to boost U.S. uranium in decades. Can you give me some color on that? How will this be used? Who could benefit from the most from that? And is that enough?
Oh, well, I'll take it in reverse order. No, it's nowhere near enough. But it's certainly a good, healthy start. And as you point out, it's the biggest single, investment in nuclear power by the government in a long time. And, it just illustrates that in spite of the rather tense environment between the right and the left in the political halls of the U.S., that is one thing they do agree on, is the necessity and somewhat of an urgency for nuclear power. I think they could be a bit more urgent about it and open their wallets a bit more to help. But clearly, the enrichment is not an inexpensive proposition, and I think that's going to take the government to get involved and to a much deeper extent. And conversion, we aren't in very good shape in conversion either. So,
Yeah.
it's and certainly some of it will trickle down to the to the raw material or the yellow cake, our end of it. We welcomed their first purchase of fuel in decades last year, and we look forward to that. And then, of course, there'll be additional fuel purchases or raw material purchases, yellow cake coming with the small modular reactor. So the HALEU fuel. Even though we don't have we don't have enrichment facilities to make HALEU in this country right now. That's the biggest issue, at least not in commercial scale. There's some of it being downblended from weapons grade, but not anywhere near enough to really put a boost to the small modular movement.
Yeah. But Bill, do you believe that we will see increase in utility term contracting activity throughout the remainder of this year? I mean, we saw lower year-to-date volumes on the term market due to a legislative overhang. What's your take?
I think you will see it. I think, the other thing that tends to put fuel buyers off is any sort of extreme volatility in the market. And, contract prices right now are better than they were when uranium was at the peak in terms of the spot price. Of course, everyone looks at spot price. It's fairly transparent, but extremely thin. And it's very difficult to get a hold on the contract market because most of them, if not all of them, are done under very confidential terms. So only generalities can be gained from that oftentimes. So, but in general, when we had the price spike up $15 a pound to make that high in spot a few months ago, it was done on 3 100,000-pound trades. And similarly, when it came off the high, it was about the same. And in that sort of environment where it's so thin and erratic price movements either way, the fuel buyers are going to sit on their hands until you've got at least some sense of a calm in the market. We've achieved that now. We've been at a relatively quiet, calm spot market, and I think I think you're going to see an increase in contracting. Certainly, we've had some inward bound requests for bids, so we're certainly looking at that. One of the big issues is there are still some unfilled, not major, but some unfilled needs for 2024, and there just simply is not the product. We've been asked on an occasion or two, but we simply don't have the capacity for 24, and we're pretty booked in 25 as well. So we're looking at later out years for any future contracting, but certainly have several on the table that we're looking at now.
Okay, but what do you think Russia will do next? There are some rumors already on the social medias that Russian government will announce preemptive ban on exports of uranium fuels to the U.S. Do you see that happen?
Well, here again, I'm a bit of an outlier. Most of the West doesn't think it will happen. I've been saying that I don't see any reason why it wouldn't happen. It's hard to tell what is in Mr. Putin's head, but and I don't even want to think of the possibilities of being in his head. not a very nice gentleman, but at the same time, he's a very shrewd leader, and I don't know what would prevent him from doing it. I think if anything, he's probably waiting to see that the U.S. government did pass it. There was a lot of speculation for months and seemingly delays, and so I suspect that he would not respond immediately because that's the time everyone would be on their toes waiting for it. Yeah. I think the most likely time would be 2 or 3 months down the road when he's found new sources or new customers for his product. He's certainly not going to quit selling it. Yeah. Perhaps to India, certainly to China, North Korea, all sorts of places that we wouldn't particularly like to see it go. But nonetheless, I think he can certainly find places for it. So, it's a concern. I probably have a greater concern for it than most. So hopefully it won't happen in certain ways, and hopefully it will, like I mentioned before. I've got rather mixed positions on the subject, but I think absent him doing that, we're going to continue to see a fairly calm market through the summer, trending higher, but not not in a runaway crazy kind of market. And in fact, you may see that through the end of the year. But a nice upwardly market would suit us just fine, being one of the few companies already in production. We don't need the speculation in the market to move forward. Don't get me wrong, we'll take any tailwinds we can get, but we certainly aren't as reliant upon it as some.
Yeah, sure. I want to touch on equities. We hardly had any move in equities on the news. Why is that, in your opinion? Is that already priced, or we could see markets react when it's fully digested by the retail and the big investors?
Well, I think it's a good firm underpinning. It provides a good base so that we don't have any, further down pressure foreseeable in the market. Clearly, a couple of producers have been snapping up a bit of inventory, which might have gone into the market otherwise, which is, probably a good support for the market. But I think that it was largely anticipated. I think the general public, in North America anyway, was assuming that even though there were delays and even though there were political issues at bay that didn't really relate to the uranium ban, but related to other subjects, but it held the bill up in the Senate in particular. I think there was a feeling of inevitability that it would get done, so it was priced in effect. And I think, knowing the government and knowing the probable ease of getting the waivers, it's a bit of a toothless tiger in its current form, or at least I think it's viewed that way. I guess the real question will be how difficult is it to get those waivers? And I suspect that with the pressure that the nuclear utilities bring, they've got an enormous checkbook compared to the producer industry. With the pressure that they can bring politically, I suspect those waivers will be relatively easy to get.
Yeah, we touched on enCore, and you said that you are in very good position. I agree on that. Can you give us a fresh update on enCore development, production, etc.?
Sure. Production continues to ramp up a bit at Rosita. And I'll come back to that ramp up because there's a very different ramp up profile for Rosita than there is for Alta Mesa. And I'll explain why. Alta Mesa is days away from fluid flow, commissioning it in essence. And it'll be on a steady ramp up throughout the year. Difference being at Alta Mesa, we are starting with roughly 20% of the capacity in terms of gallons per minute of the recovery plant. And so we can establish sort of a minimum threshold to operate the plant efficiently. So that's what's going into production. But then as we add 10 or 12 new production wells, we can tie them in incrementally to ramp up that production. That's very different than Rosita, which operates on the satellite concept, where you have a central processing plant that's fed by satellite operations, different well fields around. It's going to be more of a chunky escalation in terms of growth. That is, we'll put on a well field like we did at the Rosita plant itself late last year. And then as we add additional ones such as Upper Spring Creek, then that will add another complete well field. So you'll see a much more erratic, not really erratic, but the jumps in production will be much larger percentage-wise at Rosita, but there won't be a steady ramp up per se like there will be at Alta Mesa. I mean, Alta Mesa, month after month after month, you'll see an increase.
Yeah.
And again, that's just due to the size of Alta Mesa and the concept of producing off of the ground versus satellite.
Mm-hmm. Okay, how is the situation with offtakes? You touched a bit on at the beginning of this interview. Any new offtake agreements on the horizon, maybe?
Well, we've got 2 or 3 that are sitting on the desk that we're negotiating on. Here again, I'd love to be able to give you the specifics, but A, they aren't finalized, and B, they're under, pretty strict confidentiality. But
Sure.
Nonetheless, as I indicated, I can tell you that the contract markets are higher than they were when the spot was at its high. So, the contract markets continued to rise fairly steadily. And as I mentioned, once things get a little crazy, the fuel buyers tend to back off and wait for it to settle a bit. So, we're quite pleased with where the market is. Obviously, we think there are bigger and better things coming, but we're quite happy with the current situation as well.
Okay. I have a question also for C2C Metals. What are you guys currently doing over there, and what are some catalysts expected in 2024 for that company?
Well, that company's not, first off, on the state, it's not related to enCore in any way.
Yes.
I want to make that clear. And we brought in a new CEO that's doing this, frontman spokesman for it. But we've got some very experienced geos working there, in particular, Doug Underhill. 40 years experience. But basically, it's a much earlier concept, and it's all conventional. There will be drilling at several of the projects are under permitting now. And there's also continuing research into the conventional aspects of the databases. So proprietary data is a wonderful thing in the uranium business, because so much of it no one's looked at in the last 40 years. So people that had that data 40 years ago, most of them are not in the business anymore. Those records have been lost. There weren't very many copies of it to start with. So actually having data, throughout the history of the uranium market, and having it in your possession. And of course, we have the biggest database available. So, and by we, I personally have purchased most of the data myself. So enCore has its own proprietary data, and that's completely separate. It's not involved at all with enCore. But there's certainly opportunities for some of these projects to move forward, and that's exactly what we'll be doing, drilling 2 or 3 of them before the end of the year, and probably likely for the guys to find another 1 or 2 jewels in the database. So it's a continuing growth pattern, but here again, it fits extremely well with our view of the uranium market. We think we're in a multi-decade real sea change in terms of the industry. And, when this first started, everyone was saying, oh, look, it looks like 04 to 08. And oh my gosh, we've had the peak and it's all over with now. And I think that's a completely wrong way to look at it. That market was driven by a completely different set of factors than this one. That was a supply crunch in a market that was actually dwindling in demand. Now we're in an increasing demand with a decreasing production. So it's really fundamentally different. And aside from the commodity, there really is no similarity to this price movement and the one 15, 20 years ago. We lived through that with Energy Metals and Paul building Mustenia and Alta Mesa last time. So we've got a broad depth of having seen a lot of these cycles, but this is the real one, we think. And I often equate it to being in the oil and gas industry. If you jumped in the 1950s or 60s, not every 6 months is going to be a great 6 months. Not every quarter is going to be a great quarter, but over the years, it's going to be a profoundly great place to be with, considerably better than average returns.
Yeah, you have to look at the big picture always.
Yeah, exactly. And that's what they're doing with the conventional assets. They clearly take longer to develop than ISR, but quality assets are going to come into production, especially if they're in the U.S.
Yeah, same question for Nuclear Fuels Inc. Overview and plans, if you can share some.
That one I can certainly give you a lot more information on. I'm involved with that a lot more closely. Certainly, enCore has a keen interest in nuclear fuels, and in many ways, it's the exploration arm of enCore, just due to the fact we're big shareholders and do have back-end rights to their major property at KC. And that claim block extends for many, many miles and butts up next to Energy Fuels Nichols Ranch project. It's in the Powder River Basin in Wyoming. Really, there are 3 formations in the Powder River Basin at various places that are known to contain uranium. And we've got all 3 exposed, and due to a slight dip in the strata, reachable with the same drill holes, which is a very unique position being on the west side of the basin. Currently, I think they've got 2 rigs turning. Had a lot of rain lately, so it slowed things down. But 2 rigs turning and got an awful lot of land to cover. So I think you'll see a lot of results coming this year. And we've got a considerably beefed up staff with a number of experienced roll front uranium geologists working for us in the field. So, that plus the Boot Hill project, we're starting to permit that. That's in southern Wyoming. And then of course, the Moonshine project in Arizona, similarly under permitting. And I think you'll see 43101s at some point here in the not too distant future coming out on the Moonshine property, as well as an exploration non-resource 43101, kind of encompassing the greater KC project in terms of its overall scope, because we have a hard time getting our hands around the potential of it. It's really quite large, and we've got hundreds of miles of roll front. But I think we've quoted 110, but that number upon expansion of the property has gone up quite a bit as well. So getting that 43101 out in terms of an independent assessment, demonstrating and kind of describing the overall potential is going to be a key movement forward. And of course, we're still looking for other assets when they come by and evaluating those as well. But my main emphasis obviously is on enCore, and do keep track very closely of what nuclear fuels is doing. Aside from that, simply a board function on the others, and a bit of advice and access to data.
Yeah. Bill, let's move to Q&A section. I have few questions from my followers. I believe that the majority enCore related. So let's start. The first question would be, how many pounds of uranium do you expect to produce for each of the following years, 2024, 25, and 26?
24, we will be somewhere, I would say and these are just very general guesstimates at this point.
Sure.
Alta Mesa comes on, because you do have ramp ups, but it's going to be in the, we hope to produce somewhere near 500,000, 400 to 500, something like that. Here again, it's just a question of how quickly, every day that you're in production, it's better. The more wells we can bring on quicker. If we had 20 drill rigs, that would be easy. Right now, drill rigs are the biggest key to our ramp up. And quite frankly, there's a shortage of quality drill crews out there. So that's something that we're always on the lookout for.
Got it.
Then I think if you look into 25, here again, that'll be a ramp up year for both of them. So, will we hit 1 million pounds? I don't know. Certainly be our goal. And then in 26, we should be well beyond that.
Okay, well beyond that. Okay.
Next. Ramp up will be over, really in terms of both of those by then. Alta Mesa steady ramp up for a year and a half or so.
Okay. Next question. Is there any chance you can expand production capacity at the Alta Mesa, especially if you keep seeing better grades?
The answer to that is yes. And also at Rosita. The nice thing about our Texas plants is they are not restricted by permit in terms of their output. And that's a bit unusual. We really are prime beneficiaries. It's simply a function of putting equipment in and plumbing. And most of that would not need to see an interruption in current production until you actually are tying in the new equipment. So both plants are readily expandable. We have looked at taking our Kingsville plant, which is a sister plant to the Rosita, and combining it with the Rosita to, in essence, double the production capacity at Rosita. And we'll probably do that at some point, but right now we need to get it up to filling Rosita's capacity before we worry about doubling it. But there's certainly that potential at both, and I think if you look down the road far enough, certainly a likelihood.
Okay. Next question. What is your strategy to get as much leverage as possible to a possible upcoming spike in the uranium price?
Well, this may disappoint a few people, but I think if they're in it for the long haul and have lived through the markets, they'll understand it and be quite appreciative of it. We don't want to have maximum leverage to the upcoming price in the market. First thing about the upcoming spike in the market is you have to be in business to take advantage of that. And if you live and die by it, your maximum leverage would be to be 100% exposed to spot. And that's a very precarious position in our view, and one that the company would not do. It looks great on the way up, but if you get one of those flat 6-month periods or even a downtrend for 6 months at anywhere along the way, selling into the spot market will become very precarious. The bids go away, and it's very problematic. And so we prefer a more balanced business case, because we are in the business for multiple decades. And as such, we want to ideally maintain a 50% exposure to spot and 50% to contract. And that is difficult to exactly identify where we are, because of our fixed price contracts. They aren't fixed except in the floor and the ceiling, so that they have some exposure to spot even on the contracted pounds. So, in reality, we're probably going to be a little bit over that 50% in spot, but the key on those contracts is they're take or pay. So if you have a very weak spot market and you can't find any customers, which oftentimes happens or has happened throughout history, then you actually have a contracted counterparty that's on committed to purchasing those pounds at a given price, that being the floor price. So it's definitely the best way to go in our vision. Make sure that we operate at a positive cash flow, profitable level once we've achieved a certain base level of production. And to us, it's just far more prudent. You have to be in the game to win the game.
Definitely. Bill, do you see any possibility that utilities would agree to sign sales agreements without ceilings in order to be sure of the availability of supply?
It's a good question. I think it's unlikely. I think you may see some rather dramatic increases in that spread between the floor and the ceiling. We've seen in general since 2 years ago a gradual expansion, or a delta, if you will, between the high and the low.
Yeah.
Between the floor price and the ceiling. I think you're going to see that continue. If Mr. Putin, so much hangs on Mr. Putin's reaction, right?
Yeah.
So if he were to cut us off immediately, or as I say, probably if he's going to do it, I think he'd do it in 2 or 3 months. He'll catch us by a bit of surprise. Everyone's forgotten about it, and then boom. So if he does that, then I think you'll see you may see the spot market go no offers. There'll be some people obviously taking big profits, but after that's gone, you may actually see no offers for a while until it's sorted out. That would be an extreme case, but that would certainly set a fire under the equities. That would be, some of your questions are relating to spike. That would certainly cause a spike. But I think that during that time, here again, the utility buyers, while they're quite concerned, they're probably going to wait and see how it all settles out rather than chase it. And I do think that that we will see this year a continued, because he doesn't have to say no tomorrow or in 2 months. He could say no at the end of this year. And I think a lot of that hinges upon how many more times we stick him with a sharp stick over Ukraine. At some point, he's going to want to take retaliatory measures, especially if the assets that have been frozen start being seized of his, that the Western world has done. So here again, I don't approve of his methods or what he's doing, but he essentially holds the cards at this point in terms of what's going to happen in the near future. And will they get to contracts with no ceiling price? I just don't see it, but you may see some pretty ridiculous ceiling prices.
Yeah. Next question. Your company, as we all know, is focused on ISR. Is there a possibility that you acquire and operate some hard rock uranium assets?
Let me sum that up in one word: no.
Okay, let's move to the next one.
I mean, our expertise is, there's nothing wrong with conventional, but it's a completely different skill set. I mean, we're basically moving fluids. We need reservoir engineers, we need stratigraphers, we need, basically akin to petroleum, much more than mining. And in fact, the whole ISR industry is regulated, at least where we're operating, by the oil and gas authorities and occupational safety and health. It's not regulated by the mining industry or by the mining regulators. So it really is a very different mix. And we just, we think we've got the strongest team in the world, really, for ISR, certainly this side of Kazakhstan. And that's our expertise. And we're going to, rather than try and dabble in a number of arenas, we're going to just try and excel and be the leader in our one industry, and that being the ISR.
Okay, next question. M&A targets that you are potentially interested in, and the question is there an option that you acquire much bigger mine in the future that you can move forward?
Well, here again, organic growth is rewarded better than acquiring a big one, and I think Alta Mesa will get to be quite substantial, probably beyond our expectations. Grades continue to impress. They historically have. Paul started that. Paul Goranson, our CEO, started that project years ago, and he's the only one that's not surprised at the grades that we're seeing in some of our drilling, because historically, most of the surprises, not all of them, some of them are on the downside, but a lot of them are on the upside. And so I think, given the size of that property at 80,000 hectares, we've explored less than 10% of the roll fronts that we know of. That's got the makings of really quite a dynamic and quality growth story. Similarly, our Dewey Burdock project in South Dakota. I mean, it's 17 million pounds. Obviously, it's not quite as easy to work in South Dakota as it is Texas. And cost of production will be a little bit higher because of the winter conditions. You can't just leave your plumbing laying out on the surface. But we've got another property called Dewey Terrace, which is about 5 miles to the west, located across the state line into Wyoming. And we'll be actually doing some drilling on that this summer, trying to connect the two because we know they're both on the same set of roll fronts. So being able to, link those two together, it opens up a world of possibilities as to exactly which side of the border you build your plant on, perhaps providing a bit of political leverage there, because obviously the tax base is going to go to one state or the other. So a bit of negotiations perhaps, and obviously it would be increasing the resource if, assuming we're successful in tying them up, and certainly think we will be. So that could be a real big surprise. The one thing I would say there, though, is in order to change our capacity, the NRC permit, there's 1 million pounds a year. We would have to amend that permit. Unlike Texas, where you can just build it bigger, in South Dakota, since it's not an agreement state and it's operating through the NRC, we would have to amend the permit to increase the production there. But here again, over the years, it's certainly not like putting in a brand new permit. We could certainly do that given the right resource numbers. Getting back to your first question of M&A, if I might touch on that, just please, because I don't want to avoid the question at all. And we've got quite a track history, both with this company and predecessor companies of being active in the M&A space. It's no secret we like it. We're set up to do it. A lot of small companies don't like it, but we've got a legal and accounting department that just routine business actually in accomplishing them. So going back again, we're going to stay in ISR, so that limits the number of potential acquisitions. We're going to stay in the U.S. unless there's an incredibly compelling, overwhelming opportunity somewhere else. So 98% chance we'll stay in the U.S. So what that does is it really limits the acquisition targets to probably 10 or less. And in terms of public companies, and your audience knows as well as I do who those might be. But there are a number of other companies that have a piece of their company that owns some ISR assets, or there are some private companies that own some ISR assets. So there are still some interesting and valuable pieces on the playing table, if you will, or playing board that might make interesting additions. But as with any M&A, it's always an opportunity. You know what the opportunity is? It's a matter of getting the cost right.
Yeah.
So and that's usually a relative valuation between ourselves and someone else. And my hunch is that while there's nothing sitting on the table now, my hunch is that we'll do another acquisition or two, maybe 3, who knows? But we're not in any hurry because while most people are spending money, we're actually bringing money in. We've gone through our spending phase. We've built everything. So I think we'll see the delta in terms of our trajectory will be, we've got, 70 plus $80 million in cash, and bringing cash in and starting revenue from our bigger project here in the next month or so. In terms of the revenue part, we'll actually start production before that. Yeah. I think our relative terms in terms of prices should appreciate more than some of the things that we're looking at. So we are optimistic, but certainly not in any urgency to do so. We're quite happy playing our existing hand if opportunities do not present themselves in terms of a compelling economic situation.
Okay, that's a great answer. Let's move to the next one. How do you see potential of uranium exploration in Utah, especially in the Emery County and Green River?
Well, I think you're going to see exploration all over the U.S. Certainly Utah is known for its conventional assets. There are no in situ projects known yet, although some of the favorable stratigraphy does occur in Utah. So maybe some ISRs will be discovered. But I think you'll see a lot of smaller exploration projects in Utah, and they may turn into bigger ones, building on success. So I think you'll see that develop. I think the real push will still be on ISR in the U.S. for some time to come. I would dare say that 90%, 95%, maybe even more than that of the drill rigs operating right now are operating on ISR projects. So, clearly is the big focus in the U.S., and that's clearly between Texas and Wyoming. Here again, 95% of the efforts going into those two states.
Okay. Next one. Will you consider going vertical? That is, acquiring or merging with a fuel converter or enricher?
Certainly not at our initiative. So I can answer that in the same word, no. At the same time, there's unforeseen events. It's not inconceivable that one of them may go downstream looking for a yellow cake producer, in which case you can't ever rule out someone making an offer that's so compelling that you have to take it. But certainly not in our plans.
Okay. Two more. Next question. You already answered the part of it. When is Alta Mesa going to full production?
Full production will be, like I say, we'll be in commercial production this summer. We'll be startup production here within a matter of days, literally. So certainly before the end of May, we anticipate being in production as we previously announced. Not sure what time this interview is going out, so I had to say that. But we'll be in production in May, and it'll ramp up steadily for the next year and a half. We've got 2 million pound a year capacity there, so you don't just flip the switch and start producing 2 million pounds. And there's still hardly any being produced in the U.S. The first quarter report came out on U.S. production not too long ago. The EIA report, matter of the last week or two, and we produced about 40% of what was produced in the U.S. in the first quarter. And that was under 40,000 pounds. So there's the vast majority of it is coming out of ourselves and UR. Those are the only two that are really putting any pounds into the system at the moment. And we certainly expect to see our ramp up continual, and that's something that I think is really critical, because we aren't going to go turn it on and that'll be this flat base. We're going to turn it on and it'll be added to certainly, each quarter, if not every month.
That was Bill Sheriff. Bill, thank you very much for coming to my show. Great interview, great chat. I enjoyed it really. So looking forward for our next interview, and I hope it will be soon. Thank you very much.
Very good. Looking forward to it too. And by then I'll be able to happily tell you that we're in production and perhaps have a background showing it in operation. We'll see. But you and want to make sure you're always welcome to come over if you find yourself in the States for an on-site visit. We're very transparent. Have hosted 2 tours within the last 2 weeks, so we like having our shareholders and interested parties come through the plant and see what we're doing.